Gold climbed steadily this week amid renewed speculation that central banks might soon unleash more monetary stimulus. Friday's PM gold fix was $1,627.25 an ounce, a 3.2% weekly gain. By contrast, silver failed to keep pace with gold. Friday's silver fix was $28.66, broadly in line with last Friday's fix. Gold has now shrugged off the effects of Federal Reserve Chairman Ben Bernanke's appearance before Congress last week. If you recall, gold fell nearly $70 following the release of Bernanke's prepared statement to the Joint Economic Committee. The statement disappointed some traders who had anticipated more aggressive talk of stimulus following the release of a weak non-farm payrolls report at the start of the month. Despite gold's gain this week, there has been little sign of an increase in Asian physical demand, with some dealers describing the action as sluggish. We are reminded of the last full week in February, when gold again climbed steadily in spite of relatively quiet Asian demand. Less than a week later, gold fell over $100, again coinciding with a Bernanke appearance before Congress. So the potential for disappointment remains when the Federal Open Market Committee meets next week. Having said that, US consumer price data published this week show that inflation fell by more than expected last month, which perhaps removes one obstacle to increased stimulus. A number of other data releases also suggested weakening growth in the US economy. There are therefore solid reasons to expect the FOMC will at least announce an extension of Operation Twist, the Fed's program aimed at lowering longer-term interest rates, which is due to expire this month. Two other major central banks adopted decidedly accommodative tones this week. In Europe, where Spain's 10-year bond yields touched 7% despite last weekend's Spanish banks bailout, European Central Bank President Mario Draghi said on Friday that the ECB will continue to supply banks with liquidity. The previous evening, Bank of England Governor Mervyn King said his institution will also provide whatever liquidity banks require. King, who alongside Britain's Chancellor was announcing a £100 billion stimulus policy, also went on record as saying that currency depreciation is necessary to support economic recovery. There is a need, said King, to generate recovery while rebalancing the economy, supported by loose monetary policy and a large depreciation of sterling. This, King said, should be accompanied by a gradual reduction in the government's deficit. Next week sees the latest G20 summit, followed by that Federal Reserve policy meeting. Oh, and there's the small matter of this weekend's Greek elections, which could send yet more shockwaves through Europe and beyond when markets open on Monday. To keep up with the latest in gold and silver, visit goldnews.bullionvault.com.